Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. Hope everyone's doing well. Great to see everybody. All right, so as always, our show is about your questions. So I already see quite a few of them coming in. So let's go ahead and jump into those. And first up, all right, so hey, good morning, James. How are you? All right, first up is when it comes to our first of the year anchored volume weighted average price, am I going to go back to anchoring to the previous year, or are we staying with anchoring from the first of the current year? Right, so if you have, there's two indicators that are going to need to be re-anchored. Now, first of all, if they're first of the year anchored volume weighted average price, or first of the year anything, we don't have that much to work with yet. It's only January 4, right? So I'm not going to worry about re-anchoring till probably the middle of this month. As far as the V-score goes, for those of you that say took the submarket sonar class or any of the classes where we've included that group of volume tools, the V-score I will anchor to the first of the year. And the VWAP for the yearly, that's always going to be the first trading day of the year. So, see, James, we're going to be together in the Mastery this Wednesday and next Wednesday, right? For our, our typical weekly session and live trading. Probably by the 12th. I'd say by the 12th, we're going to go ahead and re-anchor. All right. So thanks for the question. All right, next up, Kathy, good morning. KRE, sure. KRE is a double yellow and showing oversold on the slow stow. What are my thoughts on an exit point hypothetically? All right, so those of you that have been watching the show and joining me in any of the rooms, I've talked about the difference between choppy and trending markets. In fact, it's probably the touchstone for everything that we do, identifying the structure before we go to a strategy. And strategy is going to include the indicator. So awesome on the yellow. I agree. KRE is yellow over yellow. Now remember, any indicator that we're using, it doesn't know the environment that it's trading within. How could it? That's not its job. Its job is to run the price action through its little algorithm, right? I mean, this is a mathematics or arithmetic sometimes even. So it's just going to run the open, high, low, close through its little algo and spit out an answer. It doesn't know if the markets are trending. It doesn't know if the markets are choppy. So that's our job. So we're using the right tool for the right job. So awesome on the double yellow, but I actually have it as overbought. So this is a little potentially toppy. Now, I'm not going to follow an indicator blindly, right? I mean, look, I even call my indicators secret squiggles because I want to keep sort of a level-headed approach to a couple things that a lot of traders still think exist out there. There's no holy grail indicator, and not an indicator on the planet leads price. If it needs price, it cannot lead price. Although, in 30 years, you always hear, oh, this indicator leads. No, don't. And that's okay. It doesn't have to. We need it to interpret price for us. That's all. We don't need it to do magical unicorn things. That's not how the markets work. So we get the strategy, we get the structure right. We choose the right strategy, and that includes the right indicators. But then I don't want to follow blindly the secret squiggle. So what I want to ask myself now is there another level that could be an obstacle? And to the rest of your question, what are my thoughts on an exit point hypothetically? Look, if you're long from an oversold level, let's say it's the VWAP, it's the 200 propulsion down in here. Maybe you're long from as this market was sinking into support and you ended up taking a little bit of heat, right? As the minor low was put in, you bought at the Darvis maybe on December 17. I don't know when the entry was, but this volume ledge, you have a beginning of a gap, you have resistance. That's a good place to scale out, move the stop to break even, and keep going. And what I just walked everybody through, that's at the heart of what we do in the mastery. That's at the heart of the way that I process the market. And I hope to give you all enough transparency today and throughout 2022 where you can say, you know what, Rog, either that works for me or it doesn't, right? There's no right or wrong. There's no absolute in trading. Um, what I want everyone to realize is either that style is something that, something clicks and you say, oh, that makes sense, or it doesn't, right? So am I looking for a breakout here? No, no. Am I looking for some exhaustion? Overbought, resistance, right? Big gap, little volume ledge. Now, here's where it gets interesting. When you scale out and move that the rest of your trade to break even, look at the volume ledges up here accompanying the gap close. That's the next stop if we were to continue. Or for those of you that will say, hey, but what about when it pulls back? Is there a way to then engage it for that next leg if we continue to sort of cycle higher? Absolutely, right? So there's all the hypothetical possibilities that run around in my head, Kathy. So I hope that makes sense. All right, Alex asks, scaling into Bitcoin as it hugs the 200. Yeah, generally speaking, I'm looking at Bitcoin. Oh, let's just pull this up here. I'm looking at Bitcoin, normally, so 200 on what? Lately, when I've been doing uh, Bitcoin, again, I'm way more diamond hands. I'm way more of a hodler. I'm not looking at short-term trades at this stage of owning Bitcoin with my dollar cost averaging. I'm just looking to play it within the context of the trend that's on the weekly. So the 200 is nowhere near on the weekly, and I've been mostly following the trend here. On the daily, to your point about hugging it, yeah, I think we talked about this last week. That's fine. That's fine. In fact, that hugging of the 200 propulsion on the daily syncs up pretty nice in the weekly. Now, do I use daily and weekly charts as a trader? No. Daily weekly combos are when my time horizon is probably a minimum of 6 months. And, I get a lot of questions about, Rog, what about using, you've talked openly about the fact that you use the same indicators and a lot of the same strategies, but with longer time frames and time horizons for your portfolios, for your investing, for your longer term positioning. And that's true. And this is a little bit of a look at the 2 time frames that I use to do that. I don't care what's going on a 4-hour chart. If I'm looking at a 6-month time horizon, that might be more interesting for, say, a 2 to 4 week time horizon. So get the time frame right. That's going to sync up with your time horizon. But I like it, Alex. And that's how we want to do it. I agree. Wait for those opportunities. When everyone else is panicking about something that you're longer term bullish on, I'm not saying that's automatically an opportunity, but it sure should get us curious, right? All right. On another note, where do we find expectations for ISM, PMI, and JOLT numbers? So right at the Forex Factory calendar, Kathy, forexfactory.com. That's what I use. And you'll see they've got they've got the forecast as well as the previous. And those two, the forecast and the previous, that's really all you really need to know. Now, if you're curious, because you followed my macro analysis process, you're thinking, Rog, what about the rate of change? What's the trend of the ISM, or what's the trend of whatever this data release hot zone is? There's a graph that you can check out as well. So that's all at forexfactory.com. All right, moving on. Oh, and by the way, some of these sites and some of these good habits that we talk about here in Charts and Coffee, in yesterday's free video over at the Simpler Trading YouTube channel, you can check that out. I called it basically building good habits for 2022. So you can check that out. What are the sites? And then I also delve into a little bit about what the seasonal expectations are for January, which is a question I think we had in Charts and Coffee yesterday. So whoever asked me that, I thought about that. It's in yesterday's free video. You can check it out at the Simpler Trading YouTube channel. If you have a question, leave a comment. And if it was helpful, smash that like button on the way out. All right. Next question is Holiday in Express. Why is it that Simpler does not suggest strangle trades? I don't know. I don't do them very often. I can't speak for everybody else. But look, if you're going to do strangles and straddles, right? If you're looking for a market to either explode out of a range or remain in a range, there's so many variations. And I think in a roundabout way, right? Does it have to be a strangle? No. I mean, maybe you're familiar also with a very old school approach. Like, I think we call them different things. Like, I like strip option strategies and strap option strategies. They're sort of lopsided, directional, range bound type approaches. But I mean, I think that we may not call them strangles, but think about what the objective is. And I'm pretty sure, when I'm putting on a strip option strategy or a strap option strategy, it's very similar to the strangle. I'm pretty sure John does that type of range bound type entry. So I'm not really sure that we don't do it. We just, the thing is, I've got a book on my shelf. I think it's called the Options Playbook. You know when I bought it? Not that I don't know how to trade options. I don't know all the different names. This book has got to be about yay thick. There's only so many things you can do with an option, right? Long, short, put, call, and then all the myriad of combinations. They're like eggs. You can do a lot of things with eggs. And there's a lot of different names for the recipe. So the way that I've always looked at it, and thanks to the question, is, what's the objective? And it very well could be something that capitalizes on that kind of environment. We just call it something else. I've got a terrible habit of naming things that just sort of resonate with me. And actually, strip option strategy, strap, I didn't name those. Those are very old school and one of the gazillion different titles for these combinations that exist. So I'm pretty sure we do them. I just don't know what we call them. So anyway, I don't know if that was helpful, but I hope it was. And again, as long as you know your objective for the range and what you think the markets are going to do, I never get hung up on the name. I just think about the individual legs that I need to put on for the trade to work best. All right, Jim asks, mentions Tesla is in beast mode. I mean, look, it bounced off an oversold level. It's up near overbought. It is not trending, so be careful. If I'm going to give something beast, if we're going to be in beast mode, I've got these little what do you call them? Not bracelets, they're kind of the elasticy. And I have this green one. I think it came with a supplement that I bought. It says beast mode. And to me, beast mode is if you're in the gym, you're hitting PRs, right? You're hitting new personal records. If it's a stock, futures contract, whatever, it's got to be an uptrend for me. Exploding higher, gapping up. I believe their delivery numbers were very good. Just be careful because it's not a trend yet, but it's not a trend. And it's nearing areas where it stopped before. So to me, beast mode should be an uptrend. Beast mode should be, just for me, that's the way I would process it. Beast mode should be hitting new highs, that type of thing. But the reason I mention all that is, remember, if it's in chop, not that it can't go to a new high, but the probabilities are a little different as opposed to if it were in a trend. I think it's been chopping since really the first week of December. So, but it is strong. I agree. It is quite strong. Long follow. You know what? Head on over to the Simpler Trading YouTube channel. As far as my settings and the slow stow, yeah, absolutely. Head on over to the YouTube channel, and there's a video that we did Friday, how to trade the chop in crude. I walked through all the details in that video, the settings that I use. Let's see, there it is. So I walked about a minute in. I'm already getting into settings and so forth. So check out that video. over at the Simpler Trading YouTube channel, and it walks through about 4 minutes of all the details that you need to know. And why are we talking about CHOP? Because we're in CHOP. We started the year off with, except for the S&P, the NASDAQ and the Dow are both in distribution. They're both in distribution. This is Charles Dow language describing what happens when the markets are in a wider range bound area. Okay. All right. So next up is Sherwin-Williams ready to go long? Sherwin-Williams ready to go long. We had that big, I was thinking about this when I was with the folks in the mastery, and we've had our INXHB and ITB and the individual stocks within them because that's the way we break things down in the sector room. And if you take a look, beautiful uptrend, very little, right there, a little shimmy. That's it. Little double yellow, very brief double yellow, so, in an environment of green. Now, by the way, notice what I'm not talking about here, right? What happens is we put a new secret squiggle on a chart and think it has all the answers. Be very cautious because this is a trending market. I don't give a rip what the slow stow has to say. And if it is, it's so far down the line of maybe where a pullback could start, but not wanting to short an uptrend. I don't hate my money, right? None of us should hate our money that much to try to short an uptrend. Beautiful opportunity. I agree, Anton, to get long in the wave. Yeah, I'm with you 100%. Double green, pull back into the wave. What I would say, though, is look at the size of that candle. Today's the day we want to see probably a minor low is the way that it looks like it's shaping up. And the closer we can get to the 55 propulsion, the better. But I'm with you. And by the way, there might be a number of other names that are moving like Sherwin-Williams. So it's really important to know in this passive investing dominated universe that we are all trading and investing in, what is hanging out with Sherwin-Williams? What groups do we look at? Look at XLB, look at ITB. Those are going to be really important corners of the market to look at. If you like Sherwin-Williams, you might like some of its friends too, and you might like the broader group. So that's the process of understanding index sector stock and letting sectors and index understanding drive your watch list building. So hope that makes sense. All right. So let's see. Next question. Good morning, Dorothy. Is a slow stow settings I explained in the video, is that just for the daily, intraday? As long as the lower yellow of the JT, it's as long as the lower row of the JT multi. So when do we use a choppy market tool? Now, it doesn't have to be just a slow stow. That's the one that I've been using for about 30 years. It could be any choppy market tool. Some people like an RSI. Ready, aim, fire is a very powerful one. So I'm not just saying it's slow stow or nothing and that this is the only way to decode chop. It's just the way that I've been doing it the longest. And a slow stochastic is a little unusual. Most people use a regular stochastic. And then slowing it down to the degree that I have, we have a 21 period K is also pretty unusual. So I've gone into the details. When we use it, has to be the lower yellow JT. Is it the same on intraday? That's almost always going to be my process, Dorothy. Any indicator, an indicator setting has to be both universal and robust, which is to say it works on everything and it works well. So if I have an indicator setting that has to be one way in a daily and another way intraday, I am flirting with curve fitting. Anytime you see cutesy indicator settings on, well-known indicators, it's very, very close to curve fitting because normally it just goes back to, oh, well, this setting worked for this set look back, when in reality, we want to know how it works in specific environments. And that's how I've developed the settings that I've come up with. And as long as a lower is yellow, we are good to go. All right, Battlehawk, how are you? XLC for an entry. I'd like a little bit more of a pullback, but it has a 1, 2, 3. So for those who have followed along with that Dow 1, 2, 3 that I know I've taught y'all in the past, breach of the Darvis high, breach of the 200 propulsion. If we can come back and retest it, which we could say we did yesterday, yeah, I don't mind to get long the XLC. But it's probably not at the top of my list. What I'd rather us do is dive into XLC. And we'll definitely be doing that in the mastery, because I don't know that I want to go at the tide level. And do remember this, XLC is ridiculously illiquid. So be careful with that. All right. So with all that being said, oh gosh, I did miss a lot of questions here. Do we like CVX for a buy? Real quick, on pullbacks, yes, it's actually one of the best corners of the XLE, has been for a little bit. The 10-year bond is skyrocketing. All right. Let's see what's going on here. It's breaking down. It had a really big move yesterday. So as I mentioned, we want to be long yield, which is to say short the future. So I'm with you, John. Yes. I mean, how is it going to affect our trades? I mean, if you're a fan of looking at the connection between the 10-year yield and tech, keep an eye on TNX and the NASDAQ. That's the way I would keep an eye on that. And I'm also quite bearish, Michael ZB. I'm bullish yields, which is to say I'm bearish the underlying futures of those markets. So the 10 and the 30, absolutely. All right. So gang, got to head on over to the day job, head on over into the Simpler Futures room. I'll see you all also in the options room at 2 p.m. today Eastern. Okay, be good to each other. I'll see you tomorrow here at Charts and Coffee, same time, same station.